welcome to this ET Now special. Today we're going to be in conversation with Trafigura, one of the three investors that has bought a 98% stake in Essar Oil for an enterprise valuation of almost $13 billion, which is being touted as the largest FDI deal in the country. We're joined by the CEO of Trafigura India, Raoul Bajaj. Thank you, Mr. Bajaj, for joining us here on ET Now. We appreciate you giving the time for an interview. I want to begin by asking you, why Essar Oil? You're paying about, what, $3.5 billion for your 24% stake?
Yeah, so Essar Oil is, according to us, one of technically most advanced refineries in the world. It's strategically located both for the Middle East market and for the Far East market. It is completely supported by the infrastructure, and of course, it's based in one of the fastest growing oil markets in the world. The new shareholders, proposed shareholders, Rosneft, for them, it's less than 10% of their global refining capacity. Trafigura trades more than 4.5 million barrels of oil a day. We think there's significant value to be unlocked from this investment.
Do you think you might have overpaid? There is a certain commentary going about that this valuation is so high, that Essar Oil had so many problems with its lenders, it was being forced to sell, and suddenly it announces the largest FDI deal in the country.
So we as I said, we think there's significant value to be unlocked from this transaction. Also, we think that India is a strategic market, right? And to get entry into that market, they're not assets for sale generally. So we feel that we paid a very fair price, actually.
And how did you get as part of the deal? If you could share a bit of light on that, because it was all this time, everyone thought that it was only Rosneft, and that Rosneft was perhaps going to pick up to 74%, but because of the regulations, the sanctions, etc., that was not possible. So how did you come on board?
So we have a commercial relationship with Rosneft. There was a conversation that was had about actually Essar willing to exit out for up to 98%. We value this as a strategic investment, and therefore we came on board with the consortium.
Okay, so it was perhaps done by the investment bank that approached you?
Yes.
Or was it Rosneft that said, we have a great relationship? And
it was the investment bank.
So if there was no Rosneft, perhaps Trafigura wouldn't have been on board?
I wouldn't like to speculate about that. I really don't know the answer to that. I think as the deal is structured today, it is independently decided by every shareholder what stake they wanted to take, and we're very comfortable with our 24% shareholding.
And it's for about $3.5 billion.
So the total enterprise value is $12.9 billion, which is partly divided into debt and equity, and the finer points of that's going to be worked out at the deal closure.
I'm asking this more to understand the Essar's financials, and because it has huge ramifications for Essar's lenders. So just to understand, by when will Trafigura pay the entire tranche to Essar?
The deal is set to close by the end of December, beginning of January, and that's the official statement that we'd like to make.
And obviously, I don't think this is going to be delayed, because the deal was signed in the presence of Vladimir Putin and Narendra Modi, so it doesn't get higher than that. So I imagine regulations are not going to be a problem, and you'll be able to stick to that timeline.
There are regulations that, there are regulatory approvals that need to happen for this transaction. We're very confident that it will close.
What about sanctions? There was all this talk about, is this deal possible because of the Western world led by America's sanctions against Russia? Obviously, the deal is sanction compliant, otherwise we wouldn't be here talking about it today. But is that not a fair factor for Trafigura?
No, I don't think it's a fair factor or not a fair factor. We believe the way the deal is structured, it is sanction compliant, and that is our position on this transaction.
And there is no provisioning for future sanctions or anything like that?
I can't comment on that.
Fair point. Now I want to talk to you a little bit about Trafigura. A lot of people in India may not be familiar with Trafigura. We know it's headquartered out of Geneva. We all know that you're into commodities. How long have you been in India?
It's actually headquartered out of Singapore.
Singapore, okay.
So Trafigura has been trading with Indian counterparts since inception. It was a company that was founded in 1993. We set up our first operating subsidiary over here in 2009. We actually employ 600 people in India today, which represents about 16% of our global trading workforce.
16% of your global workforce?
16% of our global trading workforce. What's very important to understand is that we not only sell crude right across the board to refineries, but we also buy products. We're one of the largest lifters of gas oil and gasoline as a group. We probably have the largest refined metal portfolio, both in terms of domestic trading, import and export, we do just shy of 600,000 tons a year. And our domestic turnover is about 8,000 crores as an entity. So
the Indian business has a turnover of 8,000 crores?
Yes, it does.
And are you going to share the bottom line as well?
No, we don't. The bottom line for the group is public information. Even though we're a private company, we publish our internal reports, as annual reports, sorry, and that's available on our website.
And going forward, what are your India plans? How much have you invested already? What are your plans for India? You seem to be very bullish if you're doing this acquisition.
Right. So I'll break it up business by business. On the oil side, of course, you know about the Essar Oil investment. On the refined metal side, we announced a 50-50 joint venture with our partners Polycab. We are setting up a copper wire rod plant in Gujarat, in Halol. We support companies like TDT, which is another copper wire producer. We have a strategic supply and offtake agreement with Nicomet, which is India's only nickel refinery. And of course, then on the coal side, we supply coal to a number of Indian counterparts that import energy. So I actually think that on a medium to long term, we are extremely bullish. We think India has very good fundamentals. We think commodity consumption is only going to improve as you have port investment, you have road investment, you have rail investment. And really, we think that it represents one of the most open markets in commodities globally today.
You think the Indian market is competitive in its openness?
Yes, I think it is actually. And of course, there's more to do in opening up the market. But I think for a fact that a multinational trading company can have a domestic turnover of 8,000 crores and have a domestic trading business and saying a lot, much better than a number of countries where it's not possible.
Can you share with us how much you've already invested in India and how much you're likely to invest?
So one of our key investments that I really like talking about is LYKOS, which is the first online sales platform anywhere in the world. It was developed in India, it was conceived in India, and it's being run out of the Indian office. We announced an investment for that of $300 million, including stocks, and I think it has a huge potential to grow. On the Polycab venture, it's $20 million, and for Essar Oil, you already know the figures.
And going forward, are you getting a higher allocation from your headquarters for India?
I think we've already got enough, actually.
Yeah.
I am very bullish in the medium term, and I'm really looking forward to implementing already the projects that we have. And for me, the key is continuity of all these projects. For Polycab, it's more of a greenfield investment, but certainly for Essar Oil, for Nicomet, for TDT, for LYKOS, it is about growing our business and growing our position here in India.
You know, I interviewed Mr. Prashant Ruya, and I found it very interesting that he told me that you guys are going to continue with the Essar branding for now, as well as the pay royalty, therefore, to the Essar group. But how will you do your own brand building?
So I think what's very important in the Essar Oil transaction is continuity. It's a professionally run company, okay, by professional management. I think it will have a board, which will be appointed by the shareholders and independent board members, and it is for them to make decisions about the brand and the strategic growth of the company.
Are you going to be on the board?
That hasn't been decided yet. I think it's very hard to paint the entire industry, commodity industry, with just one brush. I think there are certain sectors that are more open than others. Clearly for us, we managed to find the right sectors to be involved in, and we found that actually regulations have not posed a problem. I think the country is very responsible in the way that it manages its regulations. Of course, people will tell you they require more openness, and I think that's being done slowly and steadily.
You said India is a great market, it's an open market, but you know, we also hear a lot about over-regulation. Pricing is also controlled in a lot of the commodities by the government. There's also frustration. For example, Rio Tinto has exited saying, you know, that it's taking too long for approvals. So we're getting a very different kind of commentary from you. Have things changed?
So firstly, I do believe things have changed. Secondly, I think it's very hard to paint the entire industry, commodity industry, with just one brush. I think there are certain sectors that are more open than others. Clearly, for us, we managed to find the right sectors to be involved in, and we found that actually regulations have not posed a problem. I think the country is very responsible in the way that it manages its regulations. Of course, people will tell you they require more openness, and I think that's being done slowly and steadily.
Which are the states that you think are easier to do business in? You said you're opening a greenfield in Gujarat. I'm sure there are some states that are easier to work with.
Well, I wouldn't say they're easier or harder. We've had experience of operating in Gujarat, in Goa, in Rajasthan, and actually we found all those experiences to be quite seamless. So I wouldn't like to comment about whether we think Gujarat is more competitive than another state, say Jharkhand, which is where I was born. But I really would say that our experience thus far has been very pleasant, cooperative, and fruitful.
I want to talk to you a little bit about the meltdown that we've seen in the commodity world. How did Trafigura weather the storm?
So we don't take fixed price exposure. And that's been one of the defining underlying DNA of the group. So we don't do price forecast because that really has no impact on our profitability.
I was going to ask you what your outlook is on crude and zinc and copper.
So really for us, it's fundamental demand supply analysis. And you will see that for the group, right from 2008 until till 2016, we've shown a very strong profitability and growth numbers. And that reflects the fact that we believe very strongly in our business case.
And in India, are you going to work with new partners, new commodity players, etc.?
So core competency, right? We are energy traders and we are base metal traders, and we do bulk of coal and iron ore, and we are not going to diversify further from those commodities. That's really where we have skill sets. That's really where we think there's enough to do in the world, really, rather than us trying to look at other commodities.
So if you don't do price forecast, how do you hedge yourself? Let's take crude right now. It's so volatile, and all of it being decided on whether Russia is going to agree to the OPEC production cap or not. It's very volatile. So how do you do it?
Well, it's exactly hedging provides the safety barrier for the volatility of the price. So on a physical barrel basis, we are hedged perfectly. There's always a basis risk because you're hedging cross products, but underlying our ethos is to hedge all our stock and all our sales and purchase contracts.
I want to talk to you about the business you said that was conceived in India for the world, LYKOS. So how does it work? You've cut out the middleman? Is that what it is?
No, not really. It's digitalizing the supply chain in commodities. And you would not believe me if I told you that nobody else has actually digitalized the supply chain right from stock to cash and cash to stock. We feel very proud of it because we believe it's brought innovation in a market that simply did not provide services to the small to medium enterprises. Right? Indian refined metal market is unique in that it has a large number of small customers. These small customers require services. And I very strongly believe that one should not be involved in a supply chain if you don't provide services in the supply chain. In fact, I would call Trafigura a service company with a very large balance sheet.
So is this going to the other countries as well?
Yes, it is. We launched 18 months ago in India. We launched phase 3, which really provides price optionality to the smallest customers on August the 15th of this year. And I think we'll wait till the end of this year before we start exploring markets. The next obvious market is China, because it is the largest base metal market in the world.
So this was your brainchild?
It was the brainchild of the team and the company.
Was it headed by you?
Yeah, it was and is being headed by me and the head of metal trading, Anuj Bareja.
But can you give me a little idea of the kind of turnover that you're seeing on LYKOS, the kind of volumes that are being traded?
Very much so. So we're trading up to 10,000 tons a month, which when you look at the entire industry, it represents, I would say, 10 to 15% of the small to medium enterprise sector. Our turnover expected this year is about $250 million from LYKOS itself.
And that's just in India before you head to China?
That's just in India, yes.
And you'll only do the metals also in China?
Yes. That's right.
How come you're not diversifying that portfolio?
So I think it will. I think it will take a natural course of its own. We have a oil storage and distribution company called Puma, which is the third largest tankage company in the world now. Trafigura owns just less than 50% of that company. They are actually also developing an e-commerce platform for their products. So I think you're going to find a lot of synergy in the group across commodities, across products, in digitalizing the supply chain.
Because I was going to ask you about coal next, because coal also has a lot of, it brings about a lot of dirty connotations, because I'm talking about, there is a bit of, we all know about it. It's called the black gold. So when you digitize, it's going to clean up the system, right?
It certainly does. I almost think you should have my job, because you're taking words from my mouth. But the reality is, when you digitalize the supply chain and you provide transparency and you provide the same product which is available on the website for everyone to see, it does bring a great deal of transparency into the system. And that's what's happened on the refined metal side. You can today log on, do your KYC and see the pricing. It's not proprietary pricing for each customer.
So are you the first company to do this digitization, or just the first ones in India to do it?
No, we're the first company, we believe, globally to do it.
So are your competitors are following suit?
That's for them. That's for them.
Have you seen them already starting?
To see?
No, have you seen them already starting to do so?
No, we haven't actually. And to tell you the truth, I think the people in the market are at least 3 years behind now, because you don't decide tomorrow that you want to digitalize the supply chain and it happens automatically.
Obviously, yeah.
There's a lot of development that goes into it, and I think it's at least...
So it took you 3 years, obviously.
Almost 3 years of lead time, yes.
Okay. So you said that you're going to China next, but in India, when can we, for example, expect the digitization to go over to coal as well as the other commodities?
I think it'll happen in the next 6 months, really.
Oh, in the next 6 months. Yeah. But for that to happen, you're also going to have to need the PSUs to play ball and to change their entire process of buying coal. Are you already in conversation with, let's say, an NTPC or a Coal India, whoever it is that you do business with?
No, we're not. I think my philosophy in approaching business is very defined, is that you don't try to change everyone's view. You don't try to change everyone's view at the same time, right? And really, this is what we did with the refined metal sector. Everyone kept telling us how it's impossible to do LYKOS or to do domestic trading in India, and we changed it one person at a time, really. So on the coal side, we would start with one company, one contract, and then see how that grows organically.
Are you also looking at inorganic growth? Because you just said organic. You've done one mega acquisition. Are you on the prowl for more to increase your presence?
No, we're not. I think we are very satisfied with the portfolio that we have right now. Its key is to execute and deliver value for these projects, and that's what we're focused on.
But it certainly brings you into the, into the front, in the league with the big boys, if I may say. So you already won, but now you're up there. It is a life-changing, a game-changing acquisition.
Well, it's certainly given us visibility, right? I think as a group, we trade 4.5 million barrels a day. We do 16 million metric tons of base metals, and we trade almost 50 million tons of bulk commodities a year. So we are, in the commodity sector, the second largest physical player in the world. And I think it certainly gives us more exposure in India, it certainly gives us more visibility, and I think those are good things.
So are you looking for more visibility?
No, I think we're very satisfied where we are at the moment. Thanks.
Raoul Bajaj, appreciate you taking the time out and joining us here in ET Now. It was a pleasure interviewing you.
Thanks very much.
Thank you.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at @etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.